Hi, Morgan. Hi, Stephen.
Hi,
Hello,
Elise.
hello.
How are you guys doing?
Not bad.
How are you?
Welcome everyone who's here already. We'll just give people a few more minutes to get in and then we'll get started in just a couple of minutes.
Hey, Stephen, Morgan, how are you doing?
Hey,
Hey,
Patrick.
Patrick. Good, how are you?
Beautiful day.
Good. Yeah.
Wouldn't know.
You need to go to the Gallery Pastry Shop down on Penn. Just take a nice little walk. It's a pretty good lunch. So, Stephen, how do I properly pronounce your last name? Morgan's keeping it easy on me, but
Yeah. What would you take a stab at pronouncing it as?
hey, I'm the one that couldn't speak until third grade. Literally, I'm making up for lost time. Stephen Imch.
You got it. That's right on. Not many people get it right. So,
Hey, it's all those years of mispronouncing, not being able to sound out anything. You know, it helps
Yeah.
later in life. There's bonuses.
yeah, life hack. There you go.
Yeah, I don't know about that. So Elise, I know Elise is actually on this because she's across the hallway from me. But Gabby is actually running this behind us. So yeah, thanks for doing this today. I appreciate it.
Yeah.
We have a busy time right now with the SBAs. We're doing a webinar with them on Friday, and then they're doing a bunch of other things. And then we actually just introduced with in Congress the Save American Hotels Jobs Act, which we just did like 11 o'clock earlier today. So
Gotcha.
just all sorts of fun stuff.
Well, your presentation with SBA might be a little similar to mine today, but hopefully we can get you some tips
sure.
early.
No. The more information, the better. Everyone needs to be taking advantage. They need to be registering now and get ready to go.
Yep, absolutely.
No, absolutely. Yep. So it should be fun. I don't know. It's 3 o'clock. We'll see. So we're before the dinner shift and after lunch, and hotel folks are always good because they're typically more in offices. Just so you learn the time frames. So
Pro
3
tip.
o'clock is popular time for meetings for us between 2 and 4. So,
Yeah, we have an initiative for a restaurant revitalization fund that I'll be talking about a little bit today. And your comment about 3 o'clock webinars actually informed what we're doing there. So really appreciate the insight.
between 2 and 3. Don't ever schedule a restaurant meeting in the morning.
Pro tip.
That makes sense. It's one of those things like when you think about it, it's like obvious, but then you would never think about it unless you knew somebody that was in it.
Yeah, it is. Absolutely. You pause for a hot second and you're like, oh yeah, sure.
Yeah.
No, very good. I don't know, Gabby, if you let everybody in.
Yeah, people are just going to be trickling in. So if you guys want to go ahead and get started, I think we're ready.
Okay, great. You're recording as well. Good. Okay. Hello, everyone. Thank you for joining us. I believe everyone's rolling in here as we start here. On behalf of the Indiana Restaurant Lodging Association, thanks so much for joining us today about 2 programs that the state's administering, and then also we have some further conversations about the Restaurant Revitalization Fund that Morgan will be talking about. But joining us from the Indiana Economic Development Corporation today is Stephen Imch. I actually asked him before if I could pronounce his last name properly. Always it instills fear, PTSD for me on mispronouncing people's names. But Stephen, thank you for joining us. And Morgan Allen. So the people that will be actually handling and overseeing a lot of these applications for these grant programs are with us today. And the IEDC has been a great partner in terms of earlier restart grants, PPE, all sorts of different things that were far outside the norm, outside their typical scope, what the Indiana Economic Development Corporation has done. But due to Governor Holcomb and a lot of different unique initiatives and leadership from a lot of people, the IEDC has really stepped in to fill a void for a lot of different programs that have helped a lot of people keep their businesses open. These two programs today, just to not steal the thunder that Stephen will talk about, though, one was appropriated additional dollars for businesses under 10 million, $60 million. And then also those between 10 and 35, 35, 34, 35, the IEDC, in partnership with the General Assembly leadership, but really the IEDC and the governor have started that program as well. So we'll turn that over to Stephen. We will do questions and answers. Many of you now are kind of old hat with this. You obviously see the Q&A feature. Please type in there. Some of you will text me questions as well. Absolutely fine. But please, we're really here to answer a lot of your questions. A lot of you have already dug into a lot of these applications, but please, please, please fire away any and all questions. And Stephen, we'll turn that over to you as well.
Yeah, thank you, Patrick and team, and appreciate the opportunity to be here and hopefully get on the front end of a lot of the questions and the pains that'll come with the application process. I'm sure a lot of you, through applying for the payroll protection program or other federal assistance, there's a pretty big burden that comes with that. So we want to make sure we make it as easy as possible for you. I do have a presentation, but I'm actually disabled from screen sharing. So Gabby, I don't know if you want to spin that up on your side and drive it. That works fine. Or if you can turn that on for me, that would be great.
Are you able to now?
Yep, I got it.
Okay, perfect.
Thank you very much. All right, so I'm going to share my screen here. Thank you. All see that? You got it?
Yep.
Perfect. Thank you. So like Patrick said, we're going to talk about a couple programs here today, at least on my side. One of them is the Indiana Small Business Restart Grant, which again was a reallocation of additional funds to an already existing program. So some of you may be pretty familiar with this already. Not much has changed. I think really the only change is the $10 million in revenue cap for it. So it started back in June of last year, I believe, with $30 million. It's been appropriated $60 million more now. And it was really structured, just as by way of setting context, when the governor and his team that he had together working on econ recovery and relief, they really tried to structure this in a way that would be complementary to the federal programs, which is why payroll wasn't initially included. It is now due to the gaps that we've seen in the PPP. But yeah, it was really designed around those, since that you could generally get more bang for your buck in the federal programs in those specific areas. So broad strokes here, Small Business Restart Grant Program. It's built to cover and reimburse eligible expenses that were incurred between March 1st, 2020 through May of 2021. And we'll get into the eligible expenses here as we get further into it. But for each month that you're eligible, and each month is looked at individually, there's a $10,000 monthly cap of reimbursement up to a $50,000 total cap per company. So as this program lives on and as time goes past, you may, like as we get closer to May, you may have expenses for April that weren't previously reimbursed. And if you would like to reapply and get up to that $50,000 cap, if you haven't yet, you're welcome to apply as many times as you want, really. And we'll look at it and try to get you to those caps as well as we can within the parameters. And then I think one other thing too, just to make sure it's abundantly clear, this program, and really the one Morgan's going to be talking about as well, is since they're funded with federal dollars, there's something that's called the duplication of impact, which I might be saying something everybody understands already, but just so we're all on the same page, duplication of impact would be If you submitted a payroll expense to PPP and then turned around and submitted that same payroll expense, so say your payroll from May was submitted, and then you submitted that same payroll from May to us for reimbursement, that would be called duplication of impact. And that's actually a federal requirement that we're not allowed to do that. And it opens the restaurant or whatever business it is up to quite a bit of liability. So I'd recommend just making sure you're doing your diligence on that and being very careful, because I'm sure the Fed will find those people, because they always seem to. So going on through some details, this only applies to Indiana operations. Obviously, it's focused on Indiana businesses. So that means only the expenses incurred to either support or at your specific Indiana operation are eligible. If you have multiple hotels or restaurants spanning multiple states, it would only be the Indiana operations. And through this program, we're giving preference to hospitality industry, but by no means are we excluding any other industry. So every business that falls within the eligibility requirements is encouraged to apply. And I know that previous slide said it was through May, but we only unlock the months after they're completed, if that makes sense. So we're able to go through 12/31 with this program, or until the funding is exhausted. So until that 60 million is gone. Further eligibility requirements: you must have been in operation before October 1 of 2019, must have been profitable and have had less than 10 million in revenue in 2019. Profitability is determined by EBITDA, which, if you're not familiar, that's earnings before interest, taxes, depreciation, and amortization. The thought process behind that is really to get the most clear look at the earning potential of a business, sans all the depreciation and all the funny accounting tricks, and really just look at the health of the business and try to support them, the ones that need it, because some of the tax returns look a little wonky, but it's at its core, it's a good business. So that's the thinking behind the EBITDA. Registered to operate in Indiana in good standing with Indiana Department of Revenue. So that means not owing taxes, and have had fewer than 100 full-time employees as of December 31. Oh, sorry. For the individual months, their qualification and eligibility, what we look at is your monthly average revenue from 2019, which that's pulled from your tax return. And which basically means like whatever your revenue gross receipts was in 2019, we divide that by the months in operation. And then we're going to compare each month you apply for reimbursement in any of the impacted months to that monthly average and determine a loss. So you see here, it's a 30% loss compared to pre-COVID average monthly. So we would look at taking March of 2020 as an example, look at your revenue from March of 2020 and compare that to your average monthly revenue from 2019 and see if there's a 30% loss. This is going into the larger program that was recently announced, launched officially last Tuesday, Indiana Hospitality and Entertainment Grant. And again, this is really structured to be complementary to federal programs and make sure we're hitting those that haven't been helped yet. So it's structured really similarly to the Small Business Restart Grant program, but it's more focused in who it's impacting. Again, looking at who hasn't been helped yet and who we can provide the most help to that need it. So eligible expenses incurred between March 2020 and December 31 of 2021. On this program, there's a $100,000 monthly cap up to $1 million total cap per company. And just to make sure it's a fine point, only expenses that have actually been incurred may be submitted. So same thing with the Small Business Restart Grant program. We're only able to reimburse expenses that you've actually paid for, not whatever your P&L says you should be paying. Like if you haven't paid your mortgage, we're not able to pay it. It would be you paying for it, and then we'd reimburse you for that payment. Similarly, you can reapply as much as you want. Indiana operations only, scheduled to go till December 31 or until funding is exhausted. Again, similar eligibility requirements here. The big change is 10 to 35 million in revenue, and then fewer than 500 full-time employees in 2019. Another change here that you'll see is monthly gross revenue loss it must be at least 60% compared to the same month in 2019. So this is a subtle difference, but it's directly comparing, like in this example, July 2020 to July of 2019, instead of the average monthly in 2019 to a specific month in 2020. And again, since this is a more focused one, there's a specific set of NAICS codes that are eligible. You can see those displayed here. And I would recommend anybody going to the Back on Track website to get more information and answer any questions that you have that maybe I skate through it too quickly here, or answer it in the Q&A for you. And then on both grants, qualified expenses, payroll is the only one that's reimbursed up to 100%. Want to encourage you and the team to keep people on your payroll as much as possible. That's the thinking there. And then for non-payroll, it's up to an 80% reimbursement rate. So insurance premium, rent or mortgage payments, utilities, safety investments, or restaurant delivery software. So think DoorDash, Grubhub, Uber Eats. All of the commissions you're paying on those are able to be reimbursed. A list of required documents you're going to need. Again, refer to the site that's listed on the bottom there, backontrack.in.gov. It'll have a much more robust list for you to look through. But simply put, P&L statement for the months you're seeking reimbursement for, your W-9 IRS form, your 2019 federal tax return, proof of all the expenses, and proof of payment. Again, got to make sure the payment's actually been made. And then the signed documents from your other federal assistance programs. Wanted to take a second to, like I said at the outset of this, to answer some of the questions that tend to come up and make sure we're stopping those common mistakes before they happen to make it easier for you. But filling out the application incorrectly happens more often than everybody would probably think. A lot of times we attribute this to fat fingering, which means just touching more keys than you mean to at one time, or the wrong key. But I would encourage you to reread all of the information you're submitting and make sure specifically the contact information is correct, the banking information if you are deemed eligible, and then making sure you're providing copies of those eligible expenses that include that proof of payment. And we are looking to make sure that the information reported in a tax return is somewhat in alignment with the P&L. So making sure the numbers make sense. I know that's like fairly vague, but just making sure the numbers line up to some capacity, even with it being a downturn. And then the final piece here, I think, is there's a file size limit on the application. Unfortunately, this is a technology limitation with the application, but you can only submit up to 10 files or 30 megabyte max. So if you can logically combine those into one upload to avoid that 10 file limit, or a lower quality to avoid the size limit if you can. And then these are great reference points for you, backontrack.in.gov. I recommend going there, spend as much time as you need there. There will be some emails listed there you can reach out to for questions. And then my colleague Morgan and her team at the SBDC are fantastic references. So I would highly encourage anybody that has any questions to work with them. We've been working as closely as we can with them to make sure they're helping people in the right way, and then they're in the loop on what we're looking for and sort of some common problems. So they'll be able to really help you and your business as you're applying. And that's all I got.
Hey, Stephen, thank you so much. So some of the questions that have come in through different channels. The first and foremost, the most frequent question is, what if I've already received a full $50,000 Restart grant in January of this year or even earlier? Can we reapply since the dollars are refunded?
Yeah, unfortunately, not at this moment. That's something that could potentially be changed in the future, but as it stands right now, the 50,000 cap exists for all companies across both programs.
Then thank you. The next question is on the certification piece for how the expenses have been paid with other federal grants. So that's the question on that certification page. Many, if not all, have used PPP for payroll to meet payroll per those specifications. So does that reduce the amount of dollars that they're eligible for? Some other federal programs there as well?
Yeah, I'll answer what I think you asked, then you could tell me if I misheard your question. But a common question we get is, like, I submitted payroll to PPP, so can I not submit that to you all now? And that's not correct. It's really the specific expense. So it's payroll in May. If you submitted that to PPP, you can't submit the payroll in May that you already submitted to that other program to us. Like, is that what you're asking, Patrick?
Yeah, so what the challenge is a lot of people, in, whether hotels, restaurants, or even venues, have received one, if not two, rounds of PPP. So they're trying to figure out, okay, do I deduct the amount that I received in PPP from what I'm potentially eligible for in these two new programs, as I
Okay.
look at what my calculation is?
Yeah, I think that'd be a safe assumption.
Okay.
Just to jump in, because correct me if I'm misunderstanding. What you're asking, Patrick, is if I receive $10,000 for PPP, does that reduce my Restart grant funding by $10,000? Is that what you're asking?
Yeah, there's some concern of how that math would potentially impact, because for many restaurants and hotels, they absolutely received a lot of PPP dollars.
Yeah, for Restart and INHEG, the amount of funding that you would receive through PPP or EIDL would not reduce your eligible amount for those programs. However, you just can't submit the same documentation that you receive, that you utilize PPP or INHEG dollars for. You can't submit the same expenses to multiple programs.
Yeah, and thank you, Morgan, for clarifying that. That was the point I was trying to get at, is like, in a roundabout way, it does limit the amount you're eligible for because it limits the amount of expenses you can submit. But the amount of money you got from PPP doesn't impact the amount of money you're eligible for from us.
So on that 60-40 split, right, on PPP, if you had $100 worth of payroll, you use $60 of PPP to pay that additional 40 in that, my second grade math example, that 40 would actually be eligible then?
Correct.
Yep.
Yes.
So thank you for helping me out there. So it actually helped a lot of folks. I've been trying to explain it, and you just kind of taught me how to explain it better.
Well, and I'll talk about this in my presentation a little bit, but I think business best practice right now is make sure you're documenting the expenses that you are utilizing all of these different funding opportunities for. On the Restaurant Revitalization Fund, which I'll be speaking about today, there will be an assessment process. So after you utilize the funds, you will have to submit documentation on the expenses you utilize that funding for. And that is to make sure that there's not the duplication of effort there. So best practice, moving forward, if you haven't already, please make sure that you're documenting where your PPP money is going, where your Restart money is going, where your INHEG money is going, because that can save you a lot of headaches down the road. Yeah,
just by speaking on and just kind of looking at the current attendees, a lot of times people watch these at 3 a.m. and weird times. But the reality is a lot of the folks that handle a lot of the numbers, just by looking at some of the names, I know they're here. So these are the folks that are actually the true detail documentation individuals. So trying to
my
make
favorite kind of people.
I'm not surprised. So, but if you want to start, if there's no other questions, at least on this section, we'll kind of continue, Morgan, with some of the federal pieces where IEDC and the small business arena kind of gets involved. Why don't you go ahead?
Yeah, absolutely. Stephen, can you turn over hosting me, please, so I can present?
Yeah, as soon as I know how to do that.
If you go to the participant list, you can right click on my name and click make host.
Thank God you're here.
I feel like I've given those instructions so many times.
All right, you're the host.
That worked. Thank you. Okay, let me share my screen. Okay, can someone confirm that they can see it?
Yep, we gotcha.
Perfect. Well, thank you all for having me today. I really, really appreciate it. I know times are tough right now, so I appreciate you taking the time out of your day to be here with us. My name is Morgan Allen. I am the Small Business Program Manager for the Indiana Small Business Development Center, or SBDC. I'll be throwing a lot of acronyms your way, so if you have any questions, feel free to ask, and I'll also address some questions at the end. But today I'm going to be talking about the Restaurant Revitalization Fund, or RRF. Patrick mentioned that you all will be having a presentation with SBA this Friday, so you'll probably hear a little bit of the same information that I'll be discussing today. But I thought it was important to get this in front of you, given the news of the application portal opening on Monday at 12 Eastern time. That's a pretty quick turnaround, so I want to get this information in your hands as soon as possible. My contact information is on the screen, and I'll also be happy to share my slides today so that you all have access to it. But please feel free to reach out if I can ever be a resource. I'm not the boots on the ground people that I'll be mentioning today, but I can at least get you pointed in the right direction. So getting started, what is the Indiana Small Business Development Center? Because most people don't know we exist. So the Indiana SBDC is a program of the U.S. Small Business Administration, or SBA, and the Indiana Economic Development Corporation, or IEDC, so the State Economic Development Agency. The Indiana SBDC has 10 regional offices throughout the state with over 70 team members, providing direct technical assistance to small businesses. So that technical assistance includes no-cost and confidential business advising and training that's available to Hoosier entrepreneurs and small businesses. So we can work with people that have been in existence for 150 years. We can work with people that just have an idea and they want to take that next step. So today we'll be talking a lot about Restaurant Revitalization Fund, but we've been around for 35 years and we can help with a heck of a lot more. So some of our really popular services include business planning, just general capital access, market research. So, you're finding a new location and you want to know if there's good foot traffic there, and a heck of a lot more. So what we like to say is that anyone walks through our door, we can either help them right on that spot, or we can get them connected with one of our phenomenal resource partners to help you. So diving into the Restaurant Revitalization Fund, or RRF, I'm sure you all know what this is, but it is a financial assistance program that was passed through the American Rescue Plan to support COVID-19 impacted restaurants. I'll talk a little bit about what they mean by restaurants because it's a larger definition than what you think, which is a good thing. But this will be administered by the U.S. Small Business Administration, so the SBA. However, it is not just limited to small businesses. So long as you meet the other eligibility requirements, you don't have to be small. That SBA is just who's administering the program. The organization that is the department that's administering this program within SBA is the same department that administered PPP. So you can expect that process to look pretty similar. I know there were a few hiccups with the SPOG launch. Seems like they're off to a good start now. But this one will be administered by a different program or department. So today I'm not going to read all of the information off of these slides. Like I said, I'm happy to share the information with you or the slides with you after my presentation today. I just wanted to get the information in front of you. So I'm just going to touch on the important information on these slides and then move on. So the eligible entities for RRF are businesses that are not currently closed, permanently closed, and where the primary purpose of the business is for the public to assemble for being served food and beverages. So I want to highlight the not permanently closed. A question that we've been getting a lot is, okay, if we've closed for indoor dining or indoor drinking, but we're still doing carry out or delivery, are we eligible? Yes. What would make you ineligible is if you permanently closed your doors and you don't have an intention of reopening. So the definition of the eligible entities, yes, includes restaurants, but it also includes a lot more, which is phenomenal. I was really excited to see SBA expand this definition. So it includes everything from inns, breweries, snack shops, food stands, which is really exciting. One thing I'll touch on a little bit later, but for the people that have the little asterisks on this list of entities, there will be some additional documentation that you have to demonstrate that 33% of your on-site sales in 2019 were food and beverage related. I want to briefly touch on franchises because I thought we might have some franchisees here today. If you are a business that is operating as a franchise and you meet all other program requirements, you are eligible to apply. The only caveat is that your franchise needs to be listed in the SBA franchise directory. So I had the pleasure of attending a webinar with SBA yesterday to do a walkthrough of the application. And basically there's a little tool where you begin typing your franchise name to see if it pulls up in that directory. I would strongly recommend going to the directory online or talking to SBA to make sure that your business is on this directory as soon as possible. We expect money to go really, really fast. And so if you're a franchisee, you really need to make sure that your franchise is listed on the SBA directory. Ineligible entities, the few I want to highlight, nonprofit organizations are not eligible. I know we have some nonprofit co-op kitchens and so on and so forth, that you would not be eligible to apply. And then if as of March 13th, 2020, you owned or operated more than 20 locations, you would not be eligible. So the funding amount, this will vary by business type. It is gross revenue based, but the maximum amount of award that can be provided is $10 million, and that is a $5 million per location maximum. The minimum award amount is $1,000. So if you are only eligible for 500, you're not going to be eligible here. What we talked about with Patrick earlier on the Restart and INHEG side was if PPP reduced the amount that you were eligible for Restart and INHEG, that is not the case, but for Restaurant Revitalization Fund, it is. So any of the total funding amount that you will be eligible for, your PPP loan will be deducted. And then funding calculations will vary based on the business operation or start date. Again, I'm not going to read these formulas. Again, happy to share my slides, but just want to highlight that there are 3 different funding amount calculations. And then for gross receipts, as you are plugging and playing for those calculations on the previous slide, the following are not included in your gross receipts. So PPP first and second draw, and that's for those that were received in 2020 and 2021. The economic injury disaster loan advance or the targeted advance or other grant funds received through the CARES Act. And then any state or local business grants. So the Restart grant and INHEG would not go into your gross receipts calculation for Restaurant Revitalization Fund. Eligible uses of fund, just the few that I want to highlight. Payroll costs, everyone still has payroll. If you've already submitted that to PPP, like we talked about earlier, you can't have duplication of effort, so you do need to make sure that it's a separate expense. Construction of outdoor seating, it is finally starting to warm up, so hopefully you guys will be able to get some outdoor diners again. Your restaurant revitalization funds could be used for the construction of those efforts. Expansion costs, however, are not eligible. Food and beverage expenses over in that left-hand column, including raw materials. So if you have diners, you need to have the supplies to feed them. You could use these funds to help purchase that as well. And this is not reimbursement based. So documents to apply, this will fall in 3 buckets, and based on the funding calculation that you utilize, the specific documents that you're required to submit will vary. I do have a slide with a table of those if that would be helpful. I'm happy to share it. I just don't want to go through it today because it's a lot of information. But first, the application is obviously required. We'll go through how you apply, but I would strongly, strongly, strongly encourage you to apply on the SBA website. So that way you can sign all of the certification forms digitally right in the SBA portal. Verification of tax information. This will be a document that if you go through the SBA portal, you will give SBA permission to reach out to the IRS to verify your tax information. And then gross receipts documentation. This is where it will really vary based on the funding calculation that you're utilizing. Like I mentioned earlier, for applicants that are a brew pub, tasting room, tap room, brewery, winery, distillery, or bakery, you will have to provide documentation that shows that your 2019 on-site sales were at least 33% food and beverage in order to qualify. And then for applicants that are an inn, there is also some additional documentation that's required. So the priority period. I know this has been a hot topic. I'm happy to have a conversation about it if you'd like to. But applications for priority groups only will be funded within the first 21 days. So a priority group is a business that has ownership, at least 51% ownership, women, veteran, or socially and economically disadvantaged businesses. Socially and economically disadvantaged can include minority business ownership and LGBTQ+ ownership, so long as you meet the definition, which again, I'm happy to share. This will be a self-certification in the application portal, but it will be something that SBA will follow up on to make sure you actually meet that requirement. Entity reorganization for the purpose of qualifying for that priority period will result in automatic disqualification from the award. Please don't do it. I've had a lot of businesses reach out to me and say, can I just reorganize so I can gain access to this funding on Monday? Please don't. I would hate to see you disqualified. I know that I mentioned funding will likely run out fast. I know, I hear you. It's hard. You want to make sure that you're getting access to this funding. You know, the message that SBA is pushing out is that they hope to go back to Congress and request some additional funding for this program, because we know the need is really broad and it's big. So please don't disqualify yourself by trying to get in early. I just ask that you hang in there. But even though they will only fund applications for priority groups in the first 21 days, any eligible applicant is able to apply. And I would strongly, strongly, strongly encourage that you do, so that way your application gets into the queue for review. So how do you apply? First and foremost is directly through the SBA platform at restaurants.sba.gov. Honestly, I would 100% recommend this. I'll give you a few other options, but every business owner I'm talking to, I'm saying go through the SBA platform. That's going to be your best bet to make sure that it's processed correctly, efficiently, and you're signing all of the necessary documentation. Like I mentioned, I was on a webinar with SBA yesterday to walk through the portal. It's very slick. Like, they did a really, really great job putting that together. So I don't think it will be very burdensome for you to go through the SBA platform, and I would strongly encourage you to do so. That platform will open for registration this Friday, April 30th at 9 a.m. Eastern time. Get in there as soon as possible, create your account early. On Monday, when the application opens on Monday, May 3rd at 12 Eastern time to apply, you will want to have your account created. Two-factor authentication will be required, and you don't want to be trying to set that up on the side while you see people, increasing the queue to apply. So I would encourage you to get in as soon as possible upon opening on Friday to register your account. Next option is through a point of sale vendor. There's been a little bit of confusion around this, so I do want to clarify. Square and Toast will be at least as of right now, the only providers actually accepting full applications. SBA has said that it's going to be very similar to going through the portal. It will just be through Square or Toast directly. However, Clover and Aloha are not accepting full applications. They are just going to provide documentation to you if requested that you will then take and go through the SBA platform to apply. Again, I would recommend that you just go through the platform, and that's going to be your best bet. Last option is applying by telephone. I wouldn't do this. I just got off a webinar with SBA before we hopped on here today, and they said as much. They said, if at all possible, find a computer, find the internet, apply there. I know libraries have computers available. I would strongly encourage you to go to your library if you don't have access to broadband at your home. The guidance that we've been provided by SBA on the applicants that will apply by telephone, they will take your information over the phone, then they will mail you the application that you then have to get notarized and then mail back in order for it to be in the queue to process. Again, if this money goes fast, that's not going to be feasible for most business owners. So I would encourage you to find access to a computer and apply through the portal if you can. So best practices. I'm beating a little bit of a dead horse here, but one, register your account prior to application launch. When that opens on Friday, get in there, set up your account, set up your two-factor authentication, so that way you can just run with it on Monday. 2, over the weekend, make sure you're collecting all of your required documentation prior to the launch on Monday, and you have digital copies ready for upload. So it will be a drag and drop or a document upload directly in the SBA platform. So you will want to make sure that you have all of those documents scanned in a PDF ready for upload. The guidance that SBA gave us was that each document is going to be limited to 35 megabytes. So if you have an extremely large tax return, that might be larger than the file limit. So I would go ahead and break that up into 2 documents that you can upload. Again, apply as soon as you can. The guidance we've been given by SBA is that this money is going to go fast. Hopefully they'll get more, but if they don't, you want to make sure that you get in there. So make sure you are set up on your computer Monday at 12. I know that's lunch rush, but this is priority here. We want to make sure that you get in. Make sure that you provide complete documentation. Again, I'm happy to provide that document list that's based on the funding calculation, if that would be helpful. Because if you do not upload all of the documentation up front, your application will be rejected and they will not start processing your application until complete documentation is provided. And then last, make sure you're tracking your spending. You know, this is something that I talked about earlier, but all of these federal programs, you can't duplicate expenses. So I don't want you to get audited and for there to be a finding. So make sure that you're documenting your expenses. If 60% of your payroll was paid by PPP, 40% of your payroll was paid by the Restaurant Revitalization Fund, make sure you have an Excel sheet or something that's documenting what money went where. Like I said earlier, with the Restaurant Revitalization Fund, there will be a final assessment. So after your funds have been expended, you will have to provide documentation to SBA showing how your funds were utilized. And they will use that to compare to other programs to make sure that there weren't duplication of efforts. So how can we help? Why is Morgan Allen here talking to you about the Restaurant Revitalization Fund today? Well, you know, first and foremost, we have no cost advising all the time. Like I said, we have 70 team members, boots on the ground, state of Indiana people that are there and ready to help support small business owners in their community. So contact the regional office nearest to you. Our general phone number is there, and so is our website. You can make those connections directly, or you're welcome to reach out to me, and I'm happy to direct introduce you to that regional office. And then we're really excited. The Indiana SBDC is launching a restaurant preparedness initiative. It's a partnership with Generator, which is going to be launching on this Friday. And it will be very consistent webinars and office hours focused on the restaurant industry and the Restaurant Revitalization Fund to help businesses walk through the program, determine their eligibility, and help you apply. So we're really excited about that. You know, we know that some restaurants are going to have CPAs, and you know, your CPA can go and fill out this application like it's nothing. But we also know, like my favorite taco shop in Greenwood, you walk in and there's standing room for 2 people. They probably don't have a CPA. So we're hoping to fill that gap and help people apply. If you don't have a P&L statement put together, that's something that's been our bread and butter for the past year, helping small businesses apply to relief programs. And we'd be happy to take that shoebox of expenses and turn it into a P&L so you can access these programs. So again, here's my contact information. Please feel free to reach out to me. I'm always a resource that's available. We have 70 people that are here ready to assist you, but we can't help you if you don't ask for help. So I know times are hard right now, but hang in there and let us know how we can best support you. Thank you again for having me.
Hey, Morgan, thank you so much for that. I put in the chat a couple different links for an SBA webinar piece on Friday. Frankly, a lot of the information you just received from Morgan will be there on Friday, but there's additional questions as a review the program guide, the application, and so forth. You have another round to get answers, questions directly answered directly from the SBA as well. Also realize what Morgan just said. A full staff of people that are there, ready, willing, and wanting to help you with your application, specifically for all 3 of these programs we talked about today, not just the 2 state programs, but then also the restaurant revitalization funding program. People that are available for you and want to help you with those answers. Now, on the advocacy side, we've been prepared to hopefully run out of dollars for the Restaurant Revitalization Fund. We've already been queuing up our members of Congress as well as others throughout the entire country. Right before this, I was on a state restaurant CEO call, or that was part of the conversation in addition to finding employees, which I'm sure we could talk a lot about, but specifically getting additional dollars into this program. Realize while there is a 21-day kind of preference, apply on Monday. Get your application in promptly on Monday. First in, first out, except for those 21 days, those that are designated either women-owned, veteran-owned, disadvantaged, and so forth are given preference for awards during that first 21-day period. But you can apply right as the gate opens. Cannot stress that enough to anyone. So while Morgan talked about it, I'm going to be the repetitive, stupid coach that's just going to say it 6 more times. So, but get your account open on Friday, get your application in on Monday, regardless of ownership and so forth. And as well as Morgan, I've received a lot of questions about reorganizing. Don't do that. Bad idea as well. But realize too, a lot like your PPP, how you organize your payroll through your federal tax ID. Several of you may have 2 or 3 locations at one spot, but it's one federal tax ID. Many of you on this call I know are CPAs and have quite a bit of experience in the finance side. So we'll do that.
And Patrick, I did forget to mention on the application portal that SBA has created, it's really, really great. They have added the ability to apply for multiple EINs all under the same account. So a question I've been getting pretty frequently is, do I need to create a different email and a different login for every single business? You're welcome to do so if that's how you prefer to manage it, but I would recommend that you just do it all within the same account so you can keep track of the status of those applications.
Absolutely. Let's go to a couple of these questions. While in the chat too, I'm putting a link right now to a sample application for you to take a look at and just really familiarize yourself with that. The first question, employee retention tax credit have any impact on the expenses that can be submitted for any of these grant funds? The ERTC, frankly, for a lot of restaurants and hotels have been pretty significant in terms of a tax credit for us.
That's a good one. I don't know the answer to it, but I just jotted it down, and I'm happy to shoot an email over to you, Patrick, with that answer, unless Stephen, you know.
Yeah, from my understanding, it does impact it similarly to because that's a federal tax credit, if I understand right. So I think it would fall under the same rules of the duplication of impact and effort. But I would wait on Morgan's answer.
Yeah, that's my understanding as well, but I just want to confirm before I tell you.
Lenny, much like Morgan's presentation earlier, because you probably, Lenny's not exactly, she's very, very sharp. Let's put it this way, no details missed. So in the SBA presentations that I've seen, as well as your recent slide deck, the ERTC was not included in the list of what would be would take down your eligibility. So I've noticed that because frankly, a lot of our owners, operators, controllers have really found great advantage of that ERTC. So
yeah, I want to confirm, but my understanding of the program was that it's not going to cause a reduction in your gross receipts that are utilized for the calculation of funding, but it could reduce the expenses that you could utilize the funding for to prevent that duplication of effort. But let me double check, and I'll pass that along.
Hey, thank you, Morgan. The other piece, just to qualify on times, looks like everyone saw that, answered that question as well. On another issue too, for those of you that are hanging on that have hotels, today we actually announced federally the Save Hotel Jobs Act. What that does, I'm going to put in chat as well. It's a pretty robust program. We've announced that with Unite Here, which many of you are familiar with. Very similar concepts, but really targeted for hotel-specific needs. More information on that will be forthcoming. We've been working with Senator Braun on a federal effort. Many of our Indiana hoteliers have connected directly with him, and then obviously Congressman Carson with his district being in Indianapolis overwhelmingly. So I put in chat just some of the highlights of that. You'll get more information on that as well, but that information is there. Another question that just came in, for those of us with fiscal years that aren't not calendar years, would internally prepared calendar financials for 2019 and 2020 be the best documentation for the RRF? And would you also submit fiscal year tax returns as well?
Let me pull up my list here. Okay. Oh, sorry, I don't have permission to share my screen. Okay, I'm just going to look at this really quickly. Okay, so yes, you will want to provide both. It never hurts to provide more information than what they're requesting, but the internally prepared calendar financials, yes, you will need to provide those definitely, and then your tax returns will also need to be provided.
So for those of you, could you repeat that one more time just to make sure people understand that?
Yeah, sorry about that. So to answer the question directly is, would internally prepared calendar financials for 2019 and 2020 be the best documentation for Restaurant Revitalization Fund? And would you also submit fiscal year tax returns as well? Yes to both questions. So make sure that you are submitting internally prepared calendar year financials, since that is how the funding calculation works for Restaurant Revitalization Fund. And then you are also required to submit your tax returns. So make sure that you do that.
In the off chance, Morgan, too, that let's say a restaurateur uses one federal tax ID for 4 locations, has a consolidated tax return, but then actually has different P&Ls, if you will, by per location. Should they just consolidate those 4 P&Ls into one, or how?
Yeah, so the application is going off of EIN number. So it will depend on if you have the same employer identification number for each of those locations, or if it's all consolidated under one EIN. If they are separate EINs, then you will need to submit separate applications for each one, and the corresponding, gross receipts documentation and tax return, even if it's the same for each application. If they are under the same employer identification number, that one's going to be a little bit more tricky. That would be a good question for Lindsay on Friday. My understanding is that so long as it's under that one employer identification number, there shouldn't be a problem with submitting everything under one application, but you would need to consolidate the profitability and the gross receipts documentation so that SBA can determine profitability. Not profitability, your funding amount, sorry.
Thank you, Morgan. I think this next question is really for Stephen in terms of questions with regards to profitability, taxes, and EBITDA. The question is really just that. I think someone just not familiar with the EBITDA classification calculation, if you will. I don't know if Stephen, if you want to just kind of refresh the group on that.
Yeah. So EBITDA is, I would say it's fairly common in the financial world, especially banking world, when analyzing companies and company health. It's probably less familiar for a lot of small businesses, which is fine. Again, stands for earnings before interest, taxes, depreciation, and amortization. So if you were going to run that calculation for yourself, well, first I would Google it because there's tons of ways that you would find help for that. SBDC would be a super.
Yeah,
valid.
we actually have a template, a P&L template that will automatically calculate it for you. So happy to share that with Patrick as well to distribute, because that's going to be your best bet. And that P&L template checks all of the boxes for restart.
So for those of you on this, and then several people have dropped off, which is understandable, but for those of you on this or watching this, if you registered for this webinar, we'll pass that off as soon as we receive that information. Look for that either from Gabby Brock on our team or Katie McClellan, depending on which email address Gabby chooses to utilize, in all honesty. But look for that for a follow-up from registration. Then also this week's newsletter from the association will have a slew of information, as many of these programs as the Indiana General Assembly just concluded. The IEDC is immediately ramping up these programs, wasting no time. And then secondly, we have an SBA administrator, which is a good thing, that has quickly put this out, which if you remember, when we first had the Restaurant Revitalization Fund signed, we were not anticipating this quick of action. So this is a great problem to have. This is a success problem. So we're getting these applications out to you all. And also today's long worked, much needed, much over needed hotel specific relief package. Not signed, not law, but at least we have bipartisan support already on that measure. So that's something that will be coming here in the future, not here, but a lot of information this week. Anything, Morgan or Stephen, that we missed that you think is a common issue that you have, particularly Stephen on the Restart grants, because that's something that your office has gotten quite a bit of experience on. Is there some certain things that people just kind of stub their toe on all too often, or anything of that nature that you could potentially recommend?
Yeah, I think two things, and I believe I discussed these, but I'm very happy to double down on them. One would be not using Morgan and her team enough. They're an amazing resource that not enough people know about, and then the people that do know about them often don't use them to their full capabilities. So definitely reach out to them. Totally free consulting for your business and no cost advising, like she was saying. And then secondarily, the expenses, the documentation for those, like the proof of payment tends to hang up a lot of people, it feels like. But again, we have to be able to see that you actually paid that bill. We can't just get a line item on your P&L. We can't just see a bank statement because we have no idea where that money went. Like there has to be some sort of bill or like canceled check or invoice from the company that shows that that money was transferred for that specific reason, to back up that expense.
And Stephen, can you walk through, after someone is awarded money for Restart, what does that process look like? Because I know, at least on our end, that's something that we get a lot of questions about is, what is this email? Is this spam? So I think that would be helpful to walk through with the group.
Yeah, fair question, and thank you for asking. So after they're approved on our side, you'll get an email saying that you were approved and for the grant amount. You then would move into contact with our pay agent, which is a company called Indiana Relief. They'll reach out through their email, like indianarelief@generator.com. You might have heard Generator when Morgan was talking. They've been a great partner for the state of Indiana throughout this COVID pandemic recovery. So indianarelief@generator.com will email you. They'll send you a contract to walk through that process. And I mean, if everything's moving smoothly, it's about 5 days. It really depends on how quickly you get the information back to them. They'll move as fast as you will do on that. So I would say once you're accepted, within 5 business days would be my expectation.
Perfect. And then on my end, again, I'm going to double down. On Friday, register your account. You do not want to be setting up 2-factor authentication when the application is open. You don't want to miss out on money. And 2, on Monday, have your laptop up. I know it's lunch rush, but have your laptop open to apply as soon as that application opens Monday at 12 p.m. Eastern time. Sorry, I didn't clarify that, but make sure you have your laptop open. And then the last thing I just want to touch on is these programs work together. You can receive PPP, you can receive Restart, you can receive the Restaurant Revitalization Fund. And so long as you don't use them for the same expenses, they work really collaboratively together to help support your business. Conversations that we're having pretty frequently is about how to strategically leverage all of these programs to best benefit your business. Happy to have those conversations. But please know that if you receive Restart, that doesn't mean you can't apply to restaurants. That is a common misconception that we're hearing, and it breaks my heart every time because we want you to utilize all of these programs. In my ideal scenario, you all would have received, restaurant, Restart, PPP, EIDL Advance, your local grant programs, because these programs are available to assist you, and that's what we're all here to do. So let us help, ask for help, and we're happy to jump in and offer it.
And I can't thank you enough, Morgan and Stephen, for your time today, and then also all your future phone calls that many people will inundate you with. At the same time, though, Morgan, we sincerely appreciate what you just said. It's to maximize these grant programs, to make sure we've worked really hard to make sure they're tax-free, if you will, as well. Your tax deductibility is there. These programs are here for you to utilize. Cannot stress enough to make sure that we utilize these dollars as much as possible due to the, frankly, economic losses that the industry took, not just in Indiana, but throughout the entire country. Well, we may have weathered the storm a little bit better than some of our neighbors. We're all on the same misery index, and your misery is definitely felt and realized. Realize a lot of times the folks that go through your grant applications understand the real personal nature of what you're sharing. And a lot of times they're working pretty hard to make sure you get your dollars pretty darn quick, because they know that that has an impact on people's lives, your ability to make payroll, your ability for your team members to make car payments, food payments, keeping kids clothed and so forth. For many, they understand the real human toll. So we're thankful for the IEDC, the General Assembly, for reappropriating some dollars, and the various leadership from Governor Holcomb and all of his able-bodied team that have helped us tremendously for over a year, unfortunately over a year. But we're hoping that we're seeing better times ahead. But with these grant programs, maybe that helps you get a little bit more whole, if you will, for the losses that we've all incurred. So thank you. If there are any additional questions, always feel free to reach out to your team over here at the State Trade Association, as well as what Morgan's offered. So they're ready, willing, and able, and you don't have to pay them. so Before you go to your CPA, you may want to talk with them because they're free and they probably have the right answer, and they can go to the exact person to get the right answer for you much quicker than what your CPA may or may not be able to do. So,
And you're paying for us with tax dollars anyway, so you might as well use
well,
us.
see, I was going to hide that factor, but yes, we're paying for them anyway, so you might as well use it. That's true. So thanks so much, Morgan, Stephen. Thank you for you attending, and appreciate you all so much. Remember, if there's additional questions on Friday, sign up for that webinar, get your account in on Friday, get ready to rock and roll on Monday with your application as well. And then the Restart grant, as well as the hospitality and venue grant, do it today. Get everything squared away. Stephen doesn't have anything to do this weekend, so keep him busy. But I just wanted to make sure if Stephen was still paying attention.
Yeah.
So, thank you so much. Appreciate you all. Everyone have a great day. Thank you.
Thanks,
Thank you,
Patrick.
everyone.